Dilip Bhat joining us in this leg of the conversation, joint MD of Prabhudas, Lilladher. Dilip, what a reversal in the market. Now, a lot of it is news flow driven. I guess the bulls would really be heaving a sigh of relief. But, the news flow aside, how do you look at this reversal? How do you look at the market at the moment?
Well, I think there are a couple of legs to this market. One is, of course, the structural slowdown which everyone is talking about and which all of us are experiencing. And the second is the artificial, man-made, some of those issues which have really prompted also a big sell-off. So I think on these man-made artificial which has been prompted by the budget and the so-called interpretation which has been going on, I think there is a lot of news which is flowing today that some of those will be reconsidered, as what you just some time back very rightly mentioned. How much of it is correct and how much of it is just a figment of anybody's imagination, that remains to be seen. But I think this is a very important part of the one which budget has presented and some other interpretation. So I think that if it is taken care of, possibly the markets will be in the upward phase for some time, because it has corrected quite a bit from the top. Not that the economy is going anywhere in a hurry, but still I think markets should see some kind of bounce back, which it has shown today, and that may continue for possibly some time to come now.
Okay, Dilip, hi, good afternoon. So what would be the best way to participate in that upturn then?
I think the way some of the, if you leave aside those 10-15 frontline names, I think still the other frontline names that have been beaten very badly or they have just been left behind, I think those are the ones to really pick up and play for them, not necessarily the micro cap and the mid caps at this particular stage. So I think some of those names, possibly like ITC or some of those auto names, the frontline names like Maruti or maybe Hero or something like Larsen and Toubro, I think some of those frontline names should still be the ones where the focus should be.
Okay, well, we just have about a minute for the close to come through. Dilip, just want to get your thoughts on some of the most beaten down pockets of the market, and that would include auto and auto ancillary. Would you wait to see a turnaround in the numbers and then start buying in, or do you think the valuations are good enough for an entry now itself?
Well, really speaking, one will not be in a hurry to buy some of those stocks at the moment, except to play for a bounce back, because if everything is going to go up, if the market is going to go up, some of these names also will go up. But particularly if you're talking about auto, I think one has to gradually buy over next couple of months, because the way the sales, the volume figures have come and the way the management commentary has been for quite a few of the auto companies, I think we are still maybe 3 to 4 months away before we see any semblance or a possibility of a turnaround. So I think the best thing would be, just if you want to buy 100 rupees worth of auto stock, maybe 5 or 10 rupees you allocate right now and maybe spread it out over next 5 to 6 months and do it very gradually. But there is no real hurry to buy any of these. They are not going to run.
Get in your thoughts on defensive versus going back to old favorites. I mean, at this point in time, should portfolios go back to picking more, excuse me, more of the banking names, or would you look at IT and pharma?
Well, I think the way the economy is behaving at the moment, I think defensives also would form an important part of the strategy. But yes, if you have to play for the bounce back, I think some of those old favorites and some of those frontline names should still be in your order of picking, and one should focus more on them.
Okay. Overall, what's the sense that you get from a lot of the investors, Dilip, in case any of these measures do come in? Let's say if the FPI bit is tweaked and there is a carve-out given, is that going to be enough to meaningfully turn around the market sentiment?
I think FPI is one of the main things which everybody is talking about, and we all know that the markets can swing based on the FI selling, and if they were to be a little more neutral at this stage rather than continue to sell so heavily, I think market itself will find a good support and a good tailwind for it to really start going up, and maybe 400, 500 points on Nifty from this level is not impossible to imagine then if such a thing were to happen. But yes, I think markets then possibly will try to move sideways beyond that, as it also requires a strong tailwind support from the economic growth, which possibly is something which is a question mark at the moment. So I think yes, the FIs will make a difference. Their absence of selling itself will prove to be a good trigger for the markets.
Okay. All right, Dilip, we will wrap it up on that note today. Thank you very much. Let's see if some of these